Ladies and gentlemen, good day, and welcome to Genus Power Infrastructures Limited Q4 FY'24 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jitendra Agarwal, Joint Managing Director of Genus Power Infrastructures Limited. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. A very warm welcome. Today, Mr. Kailash Agarwal is unable to join us due to some medical exigency, so he is busy in Delhi. And with me in this call is our SGA, our Investor Relation Advisor. The results and investor presentation are already uploaded on the stock exchange and company website. I hope everybody has a chance to look at it. Since July 2023, our company has consistently achieved remarkable success by securing a series of prestigious orders. The orders exceeding rupees 16,000 crores net of taxes are for the installation of more than 1.82 crore smart prepaid meters. This is the trust and confidence demonstrated by our clients is a strong testament to our dependability of our cutting-edge smart metering solutions. Our total order book, including all SPVs and GIC platform, has surpassed rupees 21,000 crores as on date, indicating a promising outlook for future revenue growth. It is important to understand that the start of these orders typically requires a minimum of 6 to 9 months from the time the order is received. This is due to extensive formalities that must be completed before starting these projects. Thus, we expect a revenue surge starting from financial year 25, driven by the execution of our good order book. Operating profit margins are also expected to improve as operating leverage kicks in, along with the realization of economies of scale and continued cost management efforts. All these orders are generally have an execution cycle of 24 to 27 months, which provides a good visibility in the coming years. Coming to quarterly results, revenue stood at rupees 420.1 crore, up by 108% as against quarter 4 financial year 23, revenue of rupees 202.3 crores. The robust order execution and ongoing expansion of the smart metering business is driving the growth. EBITDA stood at rupees 55.4 crore, up by 104% as against quarter 4 financial year 23. We have noticed a significant rise in employee costs and other expenses due to our ongoing efforts to expand our workforce and enhance our systems. This is in anticipation of meeting the substantial order book we have acquired. PAT stands at rupees 31.4 crore for Q4 financial year 24, an increase of 151% as compared to 12.5 crore in Q4 financial year 23. However, the company's profitability in Q4 was impacted as a result of a substantial rise in financing expenses. This was a direct consequence of the company's requirement to offer supplementary bank guarantees in order to ensure the influx of orders. According to our evaluation, we expect a significant surge in our revenue from financial year 25 onwards. This will be driven by a strong performance of our order book and a steady flow of new orders. We expect to record total revenue of about rupees 2,500 crores in financial year 25. With operating leverage kicking in, we also expect our operating margin to significantly improve. We maintain a very positive outlook regarding the substantial enhancement of our business operation in this financial year. We can now open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yes. Good evening, sir. Congratulations on a very good set of numbers. So my first question is, what is the status of go to live status of the existing order book? And can you help us with revenues and margin guidance for FY'25?
So status of go to live is different for all the different projects. Every project is at a different stage. So it is very difficult for me to specifically tell you as a whole where are we. So we are very much within the timelines of the project. As I said earlier, most of the project takes minimum 6 to 9 months to come onto the ground. And almost every project what we have secured currently, we are already on the ground, and most of the projects the work has also started. So every project is in a different stage currently. And as I've told earlier also, the guidelines for this financial year, what we have given is rupees 2,500 crores.
And any margin guidance, sir?
15 to 16% EBITDA.
Understood, sir. The second question is, sir, can you please help us with the opportunity size in upcoming where the tenders are yet to be opened? And the related question is, will GIC help you bid for more than rupees 3 billion worth order of contract value?
So there is no restriction from GIC that we cannot bid more than this value. So that was the minimum criteria we built between us, but that is not the limit. The projects which are upcoming, or there are a lot of tenders which are in the which are under the different states, different status. Few are already opened where we are L1. Few we have quoted. The status will be known in few months. Few will be quoted in next couple of months. So even in this financial year, we expect a good incoming of order flow.
Is it possible to quantify the L1 status, sir? L1?
Currently, we are L1 in projects worth exact number, if I have to, around 11,000 crores.
Understood, sir. My last question, sir. What are the execution challenges? And I assume that given that we are ramping up, we do need to hire people, right, to build those capabilities to execute this large order book. Can you just elaborate on it, what we are doing to ensure that we are on time and we are within the cost?
So the good thing is that we are doing what we understand it very well. So this is a metering business which we understand. And this is not the first time yet. The scale has been much larger than what we have done it in the past. But the good part is we understand what we are doing. And we are building, as I said earlier also, there's a lot of cost that has increased in terms of manpower, in terms of building the capability in the field, in-house, at headquarters. So a lot of investment has happened in the last 12 to 24 months, which is visible in our salary expenses also. So currently, as such, we are not seeing any unrealistic challenge in the field, which is a very good sign. Almost 11-12 million smart meters are installed in the country. And country, in general, the acceptance by the public, by the utilities is very, very good. Rather, what we initially thought there will be some challenges, but we are working in Assam, we are working in Bihar. These are the two states where we are working very extensively. If you see the economic status of these two states, they are one of the in the lower side. Still, the acceptance has been very, very good, which is a very clear indication that the acceptance of the smart meter is good. In general, unrealistic challenges are not visible in the field. So I am expecting a very good run rate picking up from this financial year onwards.
Understood, sir. Thank you and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, am I audible?
Yes, sir. Please go ahead.
Yes, sir. Congratulations on this great set of numbers and really Would like to congratulate the management for delivering on the commitments. Sir, number one question would be on the tax guidance. You guided last year, last quarter about 25% is the new tax regime, but since even this quarter we are seeing, more than 25% of the rate. So what is the tax guidance and what is happening in this? If you can just quantify.
So since Mr. Kailash Agarwal is not on the call and I'm generally not very equipped to answer you on this, we'll make a note of this question and we'll make sure SGA will come back to you with the reply.
Okay. No worries on that. And sir, would it be a great question if I could ask you, what is the rationale behind incorporating so many companies? We have been seeing you, Genus Power, incorporating a lot of subsidiaries. What is the rationale behind it?
So this is how the bidding is to be done. If you see the SBD, this is how the bidding is to be done, that you have to create, every bid has to be a separate SPV.
Mm-hmm.
That is the only reason, and there's no other rationale behind it.
Okay, just for the bidding prospect, we are doing this.
Just for the bidding prospect, yes. So this is how we have planned. Different companies can have only one SPV and they can bid in that SPV all the projects. We have taken a route of different SPVs for different projects. That is the only reason behind it. But once you start executing the order, every SPV has to be separate. So we are doing it during the bid itself in most of the cases.
And sir, what will be the debt cost for this financial year and debt position as on date?
So again, I would like this question to be answered later on by Mr. Kailash Agarwal.
Okay. And sir, any guidance for FY'26 or FY'27?
So I am very positive on FY'25. FY'26 also will be definitely much better than 25, but I don't want to spell any numbers so early. But yes, maybe 3-4 months or 6 months down the line, we'll give you a guidance on that also. But
All
it
right,
will be definitely much better than what we will do this year.
Okay, fantastic. I'll get back into the queue. Thank you so much.
Thank you.
Thank you. The next question is from the line of Pratik Jain from Solidarity Investment Managers. Please go ahead.
Hello.
Hello.
Yeah, am I audible?
Yes, please.
Yeah. Hey, sir, thanks for the opportunity. So can you help me with the number, what is the system-wide meters installed in India and as of today, and what is the target, what is your expectation that it will get installed by the next year? That's my first question, sir.
So currently, I can't give you exact number, but roughly what I understand from the market intelligence, almost 11 million meters are installed, smart meters are installed in India over the period of, I would say, 6-7 years when this journey started, which has picked up primarily in last 2 years only. In this financial year, I personally believe that at least 60 to 70 million smart meters will be installed.
Got it. And also, the government had set a target of, installing 25 crore smart meters. What is your realistic assumption that by when it can happen?
My realistic assumption will be it will happen in next 4 to 5 years.
Got it. And so, one more question on the smart meter side. We have been hearing that the smart meters are being currently imported from China. Can you help me understand what % of smart meters installed in India are imported from China, and what is the cost difference there?
So currently, not a single meter is being imported from China. As far as I understand this industry, if I have to put any percentage in the historical data, maybe 0.05%.
Got it. Okay. Thanks for this.
Thank you.
Thank you. The next question is from the line of Akash Vasisht from Future Generali India Life Insurance. Please go ahead.
Hi, sir. Thank you for the opportunity, and congratulations on a good set of numbers. So my first question to you is, so our other expenses this quarter have gone up by about 30 odd crores sequentially. So I just wanted to understand what will be the trajectory going forward?
So all these expenses are, during my commentary also, I made it very clear that a lot of investment is happening in building up the projects. So initial investments are generally very high in terms of manpower, people, offices, other expenses. So a lot of expenses have happened initially, and many projects are going to start in next 2 to 3 quarters. So these expenses will continue, and once we will start getting the revenues, they will get compensated.
So can we assume that the current run rate of about 75-80 odd crores, which we have of other expenses which we have done this quarter, is going to roughly remain in the same range? It's not going to increase incrementally going forward from here?
I would say yes, to a very large extent, yes.
Okay. Thank you for the clarification. And my second question is that, so we have done an EBITDA margin of around 13 odd % this quarter. But if I see the segmental reporting, the EBIT margin in the metering business is roughly around 16 odd %. So just wanted to understand what has been a drag on the console number. Somehow I'm not able to figure out the maths behind it.
Well, as you see, there's a lot of investment happening on the ground for the projects. Currently, when you see there is a metering business and then there are projects being handled simultaneously. So a lot of these things will become common once you will see projects happening continuously in future.
Okay. And my last question is, so which major states, if you can help us guide, which major states are left which are expected to place order in the near term?
So I think the major states which have still not went into the smart meters are Tamil Nadu, Karnataka, Rajasthan, Haryana, Punjab. These are the major states which are still not, some have already come out with the tenders, or some have already on the process of, but they have not started the journey. So these are the major states which have not started the journey.
Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of Chandresh Malpani from Nivesha Investment Advisors. Please go ahead.
So thank you for the opportunity and congratulations on this good set of execution. So my first question pertains to the execution on ground level. What I understand is that Genus sells to its platform the majority of its meters. So trying to understand what is the execution on ground, because our receivables as at March ending is like close to 580 crores, which is more than this quarter's sales. So trying to understand if the platform is able to execute and receive receivables on their side, so how is it happening on ground, sir?
So the receivable consists of the meters what we supply to the electricity boards, which we have been doing in the past, and platform has to do nothing. All the EPC contracts on back-to-back basis are given back to the Genus Power. So there is no execution which has to happen, which has to be done by the platform. Everything has to be done by Genus Power only. So execution on ground level, as I said earlier also, it takes its own time, in so many systems being built, integration with the current billing system, integration with the HES MDM which is there on the ground. So there is a lot of work which happens in first 6 to 9 months. So meters are being sent, they are installed, then the FAT happens, then SAT happens. All this takes a fair amount of time. So you will see, when you are seeing the outstanding, one is the historical outstanding, which is for the meters being supplied to different state utilities, which has been historical past, and some meters which are being installed in the field but not built yet because of the system integration. So if you see, this year outstanding is almost similar the way it used to be in the earlier years.
But sir, out of this total outstanding, how much would be utility based? And like what we understand is that Genus has transacted this in this way that it will only be a sole supplier of meters. So whenever the meters are being supplied, it will book the revenue to the SPV, and SPV will pay Genus in say 45 to 60 days. So is my understanding right, sir?
This is absolutely right, but Genus will supply the meters, Genus will install the meters. Once the SAT is done, then platform will pay back to Genus. So for Genus, it is like a capex business.
Okay. So
it will supply the meters and platform will pay us. We have to install them also. We have to system integrate also. And we have to, once the operation go live happens, platform pays the money to Genus.
Okay. Okay. Got it, sir. And sir, secondly, on this opportunity side, trying to understand, like, government has tendered out some 25 crore meters, but recently we also see that there is a concept of net metering getting traction. So this will open up another opportunity, or how should we see this, the opportunity side, sir, basically for our industry?
Every smart meter is capable of doing the net metering. But the only thing is, because net metering is scattered where these both are not clubbed. So initially what I believe is next 2 years, there will be some duplicacy also that will happen. That a lot of places smart meters will be installed afterwards, but net meters will be sold this year or next year itself. So some duplicacy will happen.
Okay. And sir,
We cannot do the job of a smart meter, but a smart meter can do the job of a net meter.
okay, got it, sir. And sir, lastly, again on the execution challenge, we see that some states like Gujarat facing protests from the customers complaining about the higher billing when smart meters when installed. So, and they also taken the step back and said that firstly it will be deployed in their government offices, and then the execution at the customer level will start. So, sir, do we see any challenges on execution? Your view on this, sir?
So this is absolutely a normal situation. I'm not finding it crazily abnormal. If you go back to the history, when electronic meters were installed in the initial days of 2002, 3, 4, there was some agitation in some pockets of the country. You are seeing agitation in the pocket of Gujarat, where not even 25,000 meters are installed. But we have not seen any agitation in Assam, where more than 2 million meters are already installed. We are not seeing any agitation in Bihar, where almost 4.5 million meters are installed. We are not seeing any agitation in UP, where almost 2.5 million meters are installed. So it is in some pockets sometimes somebody has created an issue, and sometimes electricity boards also take a little linear view. Okay, we will do it like this, so that they take care of their consumers. They the problem is mellowed down. So these are very normal. I'm not finding anything obnoxious in whatever is happening in Gujarat.
Okay, got it, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Akash from Dalal & Broacha. Please go ahead.
Sir, congrats on the good set of numbers.
Thank you.
Yeah. Thanks for the opportunity. My question is, if I were to segregate my 21,000 crore order book as of today, so how would you split it? How much would be for supply, how much would be for installation, and how much would be for maintenance? Just a broad breakup.
So this 21,000 crore is approximate the order book of the whole company. And this, in fact, you can remove around 1,500 to 2,000 crore is the supply orders from the different customers, utilities, supply tenders, what we win from our existing business, what we used to do earlier. Around 19,000 crores, and I'm giving you very approximate numbers. Don't hold me that you said that I can't be absolute.
Broad figures, sir. Yeah.
Broad figures I'm giving you. The 19,000 crores is from the platform. So these 19,000 crores will go to the platform, and almost 75% will come back to Genus. But this 19,000 crores includes of all the SPVs, Bidco orders, everything. So currently everything is in Genus, and then it will move to the platform. And then platform will again give the EPC contracts to Genus back. It will be almost 75 to 80%.
But out of that 19,000 crore, how much will we get for supply and how much will we get for? So maintenance will be taken care of by the SPV itself, the platform itself, right?
Maintenance will be taken care again. Everything will be done by Genus. So you can broadly break it like this. Out of this 19,000 crores, 80% will come to Genus. Okay. And from this 80%, if you form let's make this 80% as 100%. So then 50% of that 100% would be of supply, around 20% will be installation, and around 30% will be O&M, operation and maintenance. This is broadly you can break it. Somewhere it can be 45, 25, 30, somewhere it can be 40, 30, 30. So it will depend on the project to project.
This is the broad breakup. So that's 50% on supply and 20% on installation. So 70% of that money, we should be able to book it as soon as we have delivered the meters, right?
We have delivered, installed, integrated, and operation go live has happened.
Correct. So that 70% out of that.
I would say 60 to 70% again, very broadly.
Okay, 60%. Okay, so 60% we should be able to book in the next 2 to 3 years. Am I right?
Yes, to a very large extent.
Sorry?
Yes. As for the order books, it could happen like that.
So am I understanding it right?
So, hello. Disturbance, but yes, I can hear you.
Yeah. So,
sorry to interrupt. Akash, there is a lot of disturbance coming from your line. So if you are using speaker mode, can you use the handset, please?
hello?
Yeah, I can hear you, please.
Hello, is it better now?
Much better.
Yes, definitely.
So, basically, sir, I'm just trying to sum it up, whatever you explained it to me. So the 19,000, out of the 19,000 crore, around 80% will come back to Genus from the platform.
75% to 80% again.
Around 60% will be for supply and installation. So that should be that amount we should ideally be able to book in the next 2 to 3 years, when we'll be installing the maximum number of meters, right?
Yes, right.
Okay, sir. Thanks. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ashwani Sharma from Emkay Global Financial Services. Please go ahead.
Yeah, thank you, gentlemen, for the opportunity and congrats for a great set of numbers. So my first question is on the opportunity on the outer platform. How is the inquiry pipeline, if you can give us some sense?
So we have a good inquiry from almost all the major AMISP players. We are supplying meters to IntelliSmart. We are supplying meters to Adani. So very good pipeline.
Any number you would like to put, sir?
Currently, from different AMISPs, we have an order book of more than 1,000 crores.
Okay. Sir, the way, the things have started, moving in the, the smart meters in the power space, how do you see opportunity in the, smart meters in the gas space? Your comments, yeah.
So we are already going gas meters. So gas meters is more like a conventional meter what we used to see in the electricity. I am not seeing a lot of gas meters converting to smart. Most of the gas meters currently are I would say conventional electricity meter types only, but few will have already taken a few city gas distribution companies have taken a decision that we want to go with a prepaid gas meter, but they are very few of them. But yes, gas meters has a good opportunity, but more like a conventional electricity meter.
Is there a price difference or anything, any technology difference in this?
Because of the cost only. Most of the city gas distribution companies currently are going with the conventional gas meters.
Okay. Sir, the other question is bit on a long-term basis. So, over the next 4 or 5 years, what is our aspiration as far as revenue is concerned? I understand in FY'25 you might have 2,500 crore of top line which you are guiding for, and some growth in FY'26 as well. But over the next 4 or 5 years, what is our aspirations, to as far as revenue is concerned?
So I don't want to number on the aspiration. One thing is we are developing multiple lines currently. It's not that we are only focusing on the electricity meters, though yes, this is the most important focus area for us. But for the long run, as a we have done some work in the gas meter business, and now we are well-established gas meter producer. Same way, we are already working on the water meters, and we will be seeing Genus playing a fairly good role, not only in India, international markets, also in the water meter. Same way, we have done a lot of investments in the last 4 to 5 years in our international marketing development. In last year also, we did exports of more than 100 crores, and this year also we expect to do at least 150 crores. So we have been developing these business modules also, apart from the smart metering, which is seeing a major surge currently. And we have to understand one more thing: is smart meter, two things that will keep driving the smart meter business also. One is new connections. They won't be this significant, yes, but some numbers will keep coming over the years. And all smart meters have a life at the end of the day. It's not that you have installed a smart meter and now you're done for 15, 20 years. So there will be a lot of business that will keep coming after a certain period of time, after 10 years, once the contracts are over. So this is how we see our future business.
Great, sir. Thank you very much for your answer. Thanks. Those were my questions.
Thank you. The next question is from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, can you just explain the whole trade payments and working capital cycle? Like, for instance, when you bid for an order, how much advance do you get? And as and when that you supply, what are the receivable days in that case? And is there a retention element, and how long does it take to get that money back? Thank you.
So you have asked a very loaded question, because every project is different in itself. Few basic things I can tell you: most of the projects doesn't have a advance payment. The business what we are going to do is primarily for the smart meters through platform. That will be a capex business for us, where we supply the material, we do the installation, and when operation go live happens, we get paid within 45 days. And so typically, if you see our business, it's always been a working capital intensive business. Next 6 to 12 months, I continue to see that, because a lot of projects will come on the ground, FAT, SAT will happen, and then money will start flowing. But next year onwards, I definitely see the working capital intensity getting better for Genus, and otherwise it is a working capital intensive business and remains like that.
So the average working capital in terms of receivables and inventory would still be around 4 to 5 months?
It is generally 5 to 6 months. If you see our current balance sheet, it will be quite visible. But I see this improving from this financial year, in the later part of this financial year, because the business model is changing in a big way.
Right. And is there any retention element?
No, there is no retention element. Every project has a performance bank guarantee.
Okay. And the bank guarantee is there for how many years?
It is there till the contract, like if we are signing a 10 years contract, so it's there for 10 years.
Okay. So how much of non-bank funded limit that you need to do this kind of business, turnover of 2,500 crores?
Again, exact number, I can't.
Yeah, roughly.
Roughly, generally the performance bank guarantee is around 3 to 5%. So if we take order book of, let's say, if we have done the order book of 20,000 crores, so we need a 3% performance bank guarantee has already been submitted to the electricity board. So already we have an exposure of more than 600 to 700 crores in terms of bank guarantee. Exact numbers I'll ask SPA to surely share it with you.
That's very helpful. Going back to the capex, so roughly how much would be a capex for a typical order size, if you can give us as an example?
Capex in what sense? Can you?
You said that, most of these things are capex intensive. So did you mean working capital capex in that case?
Working capital only.
Okay. That's all. Thank you very much.
Thank you.
Thank you. The next question is from the line of Abhijit Purohit from Kaviraj Securities Private Limited. Please go ahead.
Yeah, hi. Good evening, sir. Am I audible?
Yeah, good evening. Yes, please.
Yeah, sir. Sir, firstly, congratulations on really strong set of numbers. And I wanted to know that after the implementation, there will be a lot of maintenance and updates and troubleshooting that might be coming our way in smart meters. So how do we plan to support that infrastructure going forward?
So there will be a proper O&M team which has to manage these meters, and it is and this is not something we are doing for the first time. Currently, also as on date, we have 500,000 meters installed in Rajasthan, for which O&M is done by us. So all these smart meters, operation and maintenance, once you installed, further for 6 to 7 years, everything will be done by us.
Okay. Also, sir, wanted to know a broader picture from you, since there are very optimistic environment that we can see for smart meters going ahead. So, do you see or do you feel that there might be some other strategic partnerships like GIC coming our way going forward?
Currently, for Genus, we are not seeing anything. We don't need it. We have an exclusive tie-up. GIC and Genus have created a platform which is exclusively working for each other. In the industry, I don't know if more platforms are coming. I'm not seeing anything currently.
Okay, sir. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question is, I'm trying to understand what is our, say, in a normalized year, how many meters can we install in a year, as in a capacity of installing n number of meters in a year?
So, there's no capacity to install the number of meters. There's no practical way to find out any capacity, how many meters can be installed in a year. So, but I expect in this financial year, the country will install at least 60 to 70 million smart meters. That is my expectation.
No, okay. So as in for our company, we can scale it quite easily if we decide on, to install a higher number of meters, right?
Yeah. Installation capacity depends on the number of people and the number of circles you are working. So yes, it is expandable. You don't need any capex to expand this kind of capacity.
Okay. Oh, okay. Got it. Okay. Right. So, and if I'm, so I just heard your commentary earlier where one of the investors asked about supply plus installation. You said after the supply of the meter and installation delivered and operated, you'll get around 60-65% of the total money. So rest I'm assuming is O&M that is spread over the number of years of contract?
Yes.
So that is, equally divided over the years, right?
Yeah, that is equally divided over the years.
Oh, okay. And if I understand it right again, you told that it is anywhere between 24 to 30 months for the project, any project that is awarded to, be executed, right?
Yes. Execution period is anywhere from 24 to 30 months, and thereafter you have to maintain it for 6 to 7 years.
And that, okay, after that, so everything inclusive, it is total 10 years, right?
Everything inclusive, it is total 10 years.
Okay, got it. Right, sir. And that's all from my side, and sir, all the best.
Thank you.
Thank you. The next question is from the line of Smita Mohta from Credent InfoEdge. Please go ahead.
Yeah. Hello, am I audible?
Yes, ma'am. Please go ahead.
Okay. So basically, I wanted to ask one thing. As the management said that they are looking at exports. So going ahead in next 5 years, on the revenue front, what percentage of revenue are you expecting in exports? And what is it of domestic? Second of all, as you said, for O&M, it's 10 years. So margins perspective, if we want to understand, So O&M has a better margin, or the smart meters installation has a better margin? And the last question would be that are we manufacturing smart meters? We, sourcing smart meters from somewhere, and if we are sourcing, sourcing it from whom? These are my three questions.
So first of all, we expect our export to grow significantly, but I'm not in a position to signify any number currently that 5 years down the line where we will be. But yes, there's a lot of investment and focus from the company side is going on the export market, and which is visible from our results also in the current order book. But I don't want to number anything, what will be the situation in 5 years. Question number one. Question number two, in terms of margins, definitely O&M is comparatively better than the supply and installation, so we maintain the same. Genus is a smart meter manufacturer, so every smart meter installed by Genus is produced by Genus.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Darshil Pandya from Fintrest Capital. Please go ahead.
Hello, sir. So just wanted to confirm our current capacity and are we expanding capacity, because you have mentioned in our press release as well?
So currently we produce comfortably anywhere from 1 million meters monthly, and we are adding up some capacity in our Guwahati plant. So we will reach to a comfortable level of 1.5 crore electronic meters every year.
So precisely should be around 30 million capacity, that is what we are adding.
So we are adding around 3 million meters capacity. So we currently do around 1 million a month, and then we'll comfortably do 1.5 crores a year.
Okay. Just a minute. And okay, got it. Yes, sir, that's it. Yes. Thank you.
Thank you.
Thank you. The next question is from the line of Rishabh Gang from Sancheti Family Office. Please go ahead.
Thank you for the opportunity, sir. So the smart metering opportunity is there for next 4 to 5 years, as you mentioned, and post that entire country should have the smart meters, right? I want to understand what would be the business plan once all the smart electric meters are installed in the country, right? Because the replacement cycle will also take some time to come. So what are the other revenue opportunities that will help us in maintaining the revenue run rate, which we might have by the 5th year end, let's say 3,000 crore rupees? I understand that you mentioned about smart gas meters, smart water meters and export. Would like to understand what is the market size, target addressable market for us in the smart gas meters in India, smart water meters. Also, what kind of export opportunity we actually see for all such kind of meters? Because in the export, I understand that we will only be selling the hardware device and not be earning any money from the installation and operation and maintenance. So how does it work, sir? Yes.
So export market, as you rightly said, will be focused on as a hardware and a solution provider. And currently we are working in 4 or 5 very fairly large opportunities in different parts of the world. So which is our focus area. To put a number, how much is the addressable market in terms of gas meter in India? Yes, we can see some 8 to 10 crore gas meters should be sold in next 7 to 8 years. So that will be a good market for the domestic side. When it comes to international water meter market, we have just entered into that. That is our long-term vision. And domestic also, we expect a water meter segment will take a very big boom in 2 to 3 years. So we are developing ourselves as a strong water meter player for domestic market also and for the international market also. So we are working on multiple opportunities currently to make sure at 5 years down the line, 6 years down the line, once we don't see such a surge in the smart electricity meter, that our revenues are being maintained. So multiple avenues are being worked upon: export market, water meter market, gas meter market, and of course our O&M will give us a fairly good amount of business year on year, and electric meter in the country. Electric meter is not going to finish. It's not that once all the smart meters are installed, so there will be no new connections or no new meters will be required. Yes, the numbers will be significantly low, but it will have some numbers to take care of. So currently, I can't give you exactly yes, but there are multiple opportunities we are working upon that, yeah, and we have a good 4 to 5 years ahead of us so that we can plan better and we make sure that we are there to achieve. We don't let the numbers go down significantly once this opportunity is over.
Okay. What is the life in terms of years, right, for the smart electric meter and gas meter? First question. Second, on the smart gas meter side, what is the unit value of each smart gas meter? And would it also have like 50% value attributable to the hardware device and 20 and 30% attributable to the installation and O&M?
So in gas meters, we are not doing anything related to O&M. We are a pure hardware supplier currently, which hovers around anywhere from 1,200 rupees to 1,500 rupees for a normal gas meter, and a smart gas meter is around 3,000 to 3,500. But mostly in India, normal smart gas meters are being sold. So that is one thing. Secondly, in terms of what was your second question? Sorry.
So what is the life of both the kind of meters?
Life of a gas meter is guaranteed for 3 to 5 years. The smart meters are guaranteed for 10 years. And that is the life of these meters. I would say smart meters, because there are a lot of components which are perishable, like batteries, capacitors, so many things in the smart meters. So 10 to 12 years down the line, the smart meters have to be replaced.
Okay. And smart gas meters, the margins also would be around 15% EBITDA margin? Or would it be lower?
Generally, for a gas meter, yes, it's like a hardware. It will be very difficult to tell any number right away.
No issue, sir. And, on this smart gas meters, is your current capacity that you have, like, I understand you have 10 million existing capacity. Can you make smart gas?
We have it for the electronic meters. Gas meters currently, we do around 40 to 50,000 meters a month.
You would need to build another capacity for the smart gas meters, right?
Yes.
And how much does that capacity actually cost? Can you give an idea on how much, let's say 1 lakh capacity, how much does it cost for capex?
Again, I don't have any perfect numbers in my hand currently. For the gas meters you are asking, but it's not again a very capex intensive industry.
Okay. Just last question on the export side, when we sell all these hardware devices, so around 50% to what I understand is attributable to the hardware device. So what are the kind of margins that we have here? And what other countries are actually in the future might go to the smart metering opportunity which we are doing right now? Any idea on that?
So when it comes to smart meters across the globe, every electric point will become smart over the period of time. So almost every nation in the world is going for smart meters. What is there? And we are a hardware supplier to the world currently. We are not doing any O&M work to any customer right now. Right now, we are the way we used to do 3 years, 4 years back in India. We used to supply meters and give the guarantee of the meters. Same thing we are doing out of India currently.
So what can be the unit value for the export and the EBITDA margins for when we export this hardware devices?
Again, it is a custom built product. We sell meters anywhere from $50-$60 to up to $400-$500. Depends on the product. It's a very custom built product.
And margins?
The export margins are comparatively better than the Indian margins of hardware.
So I can assume around 15% on hardware devices?
You can.
No, I get. What do you think, sir?
This is like, as I said, they are better than the domestic market.
All right. Thank you so much. I really appreciate your time and effort.
Thank you.
Thank you. The next follow-up question is from the line of Akash from Dalal & Broacha. Please go ahead.
Yeah, thanks for the repeat opportunity. I had one question on the ad margins front, sir. So basically, sir, currently, one is the finance cost and secondly, our losses from the JV entity. have diluted our PAT margins quite significantly. So, how would be the trajectory for those two line items going forward for FY 25-26?
Not equipped to answer this question. We have noted down your query, and I'll ask SGA to reply back to you.
Okay, sir.
Akash, do you have any further follow-up questions? No response. We'll move on to the next question. The next question is from the line of Chandresh Malpani from Niveshaay Investment Advisors. Please go ahead.
So thank you for the follow-up. So my question is on the communication technology. Like we install our meters either with cellular or RF technology. So the data suggests that the advanced economies in the world have been successful on using the RF technology. So sir, like there is something different in India because of its density or the geography that cellular will also succeed, or just your opinion on this, sir?
So, personally, I don't agree to this data that advanced economies have successfully done only RF. Across the globe, both RF and cellular, depending on the place, situation, network availability, are successful, and same will happen in India. You will see a lot of places cellular are successful. You will see a lot of places RF is successful. Practically, whether it is India or across the globe, it will be a hybrid solution that will work.
Okay, so it depends on the area by area.
Absolutely.
Oh, okay. Got it. Thank you.
Thank you.
I think we can take a couple of more questions.
Sure. The next follow-up question is from the line of Smita Mohta from Credent InfoEdge. Please go ahead.
For giving me the opportunity again. So, in the current results, we see that you have a JV of 26% on the major order book, which have been reported by the company in the results. So, why is this, JV volume so low as of 26%? Like, how can you just explain the working of this order of 26% from the entire order book? Because majorly is your JV, which is taking away the order, and only 26% is coming to Genus.
No, it is not like that. The JV means the platform. All the orders are moved to the platform, and then platform gives the EPC contract to the Genus, and which is around 75 to 80% of the value. And 26% is the investment of Genus in the platform. So
okay, got it. Thank you.
Thank you.
Thank you. The next question is from the line of Rishabh Gang from Sancheti Family Office. Please go ahead.
So just pop up to ask one thing. On the smart gas meter side and smart water meters that you mentioned, what is the stance of the government? Are they also planning to get the smart meter installed in the next 5 years across the country? Any stance from the government side you have on this?
So on this gas to city gas distribution is very clear, and the government has a clear mandate that every household, every gas connection has to be pipelined. So we expect the opportunity of around 8 to 10 crore gas meters to be sold in next 7 to 8 years. On water meters, there is, on the ground some work is happening, but nothing significant which I can substantiate as of now.
And whenever these gas meters get installed, it will be the smart gas meter and not the normal gas meter, right?
It will be both. Currently, India mostly is a normal gas meters which are being installed.
All right. Thank you so much, sir. Very good insight.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to Mr. Jitendra Agarwal for closing comments. Over to you, sir.
Thank you all for joining this call. We are grateful for the diligent efforts and unwavering commitment of our team members who have made these achievements possible. as we persist to solidify our position in the smart metering industry. We are fully dedicated to upholding our core values of innovation, sustainability, and customer satisfaction. We are looking forward to the prospects and obstacles that awaits us. If you have any additional questions, please contact SGA, our investor relation advisors, and we'll make sure you get your reply. Thank you very much. Have a good day, good evening. Thank you.
Thank you. On behalf of Genus Power Infrastructures Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.